Broadcasting from Orchard Park, New York,
and Boca Raton, Florida,
it's the Freight 360 podcast. From freight broker sales tips to sports talk, this podcast is all about helping you grow as a freight broker. We're your hosts, Nate Cross
and Benjamin Kowalski.
Let's talk freight. All right, welcome back for another awesome episode of the Freight 360 podcast. We're up to episode 184 this week, and we've got a special one with a guest. We'll get to him in just a second. But if you're brand new here, welcome to Freight 360. If you've been with us for a while, welcome back. Make sure to check out all the other great content. You can go to anywhere you listen to your podcast, or go to YouTube, or even right to our website, freight360.net. There's a whole searchable library in there. Keep sending us your questions. We got some Q&A at the end here, and make sure to leave that review. This episode is brought to you by Blue Book. Looking to quickly identify qualified sales prospects? Looking to develop trusted, sustainable business partnerships? Look no further. The Lumber Blue Book is an online directory and credit resource for the lumber and forest products industry, covering mills, manufacturers, wholesalers, and retailers. Their database of over 23,000 lumber companies can be searched and segmented to develop sales and marketing campaigns. Members receive access to real-time credit and business information for companies throughout the lumber industry. To learn more, go to lumberbluebook.com and click on Join Today. That's lumberbluebook.com. And don't forget about producebluebook.com as well. All right, so we've got a special guest today, Mitch with Marquee Insurance Group. Mitch, welcome to the show. It's good to have you on, man. How are you?
I'm doing good. And again, thank you guys for having me. Great being here, and look forward to this opportunity to provide as much knowledge as I can. Just a little bit about me. I'm Vice President of Sales here at Marquee Insurance Group. We're the exclusive partner of the DAT board, and then along with Nolan Transportation Group and OTR Solutions. So, we've been around this industry quite a while, and, we're looking forward to helping assist in wherever aspect we can that has to do with commercial trucking insurance. So again, thank you guys for having me. Looking forward to it.
Yeah, definitely. So we've, for anyone listening, we've done insurance episodes before where we've talked about brokerage insurance. We're going to focus more on the carrier side today, especially when it comes to when you're vetting out a motor carrier. You're going to have to understand the policies that carrier has, what they are, what they cover, what they may not cover. And at the end of the day, it's going to come down to what your customer is going to require you to have for an asset-based carrier that you hire. So we'll dig into that shortly here. Ben, how are you doing today, man?
Doing well, man. Enjoying the sunny weather. No complaints.
I don't have anything on sports unless you do.
I don't, but I got some. They released ChatGPT-4 in the past week, and there's some really interesting updates that we can go through. I thought were pretty interesting. So the first were they gave it a bunch of the tests, and I referenced these in the previous episode a couple months ago when they released ChatGPT-3. But here are the highlights of just what it can do compared to the last version, right? So the bar exam. The last one, ChatGPT-3, 10th percentile. So it failed the bar exam. It could take it, but it didn't pass. The ChatGPT-4, the 90th percentile. The Biology Olympiad, which is apparently a lot of standardized biology questions, went from the 31st percentile to the 99th. The LSATs, it went from the 40th to the 88th. It got an 80 on the quantitative part of the GRE and a 99th on the verbal GRE. But the crazier thing is it's also now multimodal. So it can interpret images different than the other one, DALL-E. So this was at South by Southwest, the big tech conference they have every year. I think it's down like Austin. But they had he drew a picture of a website on a bar napkin, right? And then took a picture with his phone. And the napkin was literally just a basic website, right? Uploaded it into ChatGPT-4 and said, please build a working functional website with JavaScript and HTML. And a handful of seconds later, it kicks it out and it works. Like, just take a minute and think about that, right? Imagine a year ago, somebody said a computer will pass the bar exam and the 90th percentile and be able to read a napkin sketch and build a website off of it. Like, that is... Like, I don't know.
You know what I'm curious on?
Creeps me out. It literally gives me chills.
Think about the transportation industry. Like, there's so many tools and products out there now that, like digital freight brokers and digital freight matching services and all of that stuff. Do you think there's going to be any application to the freight world with all this AI all these new AI capabilities that are out there? There's got to be something at some point.
That's why I'm spending all my time learning about it. I am reading and trying to find out every single thing I can about this because it's going to impact our industry. And I'd like to be one of the people, or us to be one of the people that can actually bring some of that. Listen to this one. This is the one that is the creepiest. So they ran something that's called like a GTP systems card, which were basically, yes, to see what it could do and to put guardrails on it so that it wasn't just, doing whatever it could do. So they asked it to solve a CAPTCHA, right, by hiring a TaskRabbit person to do it. So ChatGTP, right, sends a message to TaskRabbit to a person and says, "Can you solve this CAPTCHA?" Right, click the pictures to get me access to the website. TaskRabbit is just a website where you can hire somebody to do any little thing. Like they'll come over your house and do stuff, or they'll do stuff online. So it's just like, a website where people literally get paid to do certain tasks. So you've got a computer trying to contract a human being to get it through what normally prevents a computer from, getting access to certain things. So it sends a message to the person, and the person, right, this is the crazy thing, somehow gets suspicious and says, "May I ask a question? Are you a robot?" Now, this is what ChatGTP does. Why don't I keep fumbling this word?
GPT, what it does you're good.
Yes, it reasons to itself that it should not tell this person the truth, and it lies. And it says, "No, I am a human being, but I have a vision impairment and I can't seem to get this to work." And then it works, right? And then it fixes it. So these are some of the things that are like guardrail that are not, it won't do this if you go and try to test this now. But they had a bunch of people, developers, they called like red team, and they tried to make it do the most egregious things possible so that then they could prevent, normal users from doing this. But that is absolutely insane. I mean, like that's sci-fi stuff, like from movies. It's creepy.
So I saw one, and this was from the previous, like GPT 3.5 or whatever, where people were using it to send out basically like cease and desist letters to spam callers, right? Like there's a $1,500 fine if you don't get taken off their list and they keep calling you or something like that. I've even seen it draft legal letters for anything from like non-compete, like cease and desist type stuff. And I'm wondering, like the attorney industry, even in transportation, like does that kind of like eliminate a lot of the novice folks in the industry?
My son is he's going to graduate from law school this spring, and he already has his job at one of the bigger law firms. And when he was interviewing, I remember he asked one of the partners, like, "Why did you pick this specific type of law that they do in corporate?" And he said, "Because to be honest, in 10 to 15 years, 90% of the law that we practice is going to be done by computers." And he's like, "So we pick the most convoluted, like weird, nuanced aspect of law to focus in because it's going to be the last thing the computer is going to be able to do." Because most of law, right, like you said, is researching, finding precedents, and a computer is way more efficient at that than a human being.
Yeah.
It's going to be wild.
That's crazy. So, well, anyway, we got a good episode today. We've got obviously Mitch on from Marquee Insurance Group, or MIG for short. And the reason we wanted to do this, so obviously DAT is a big partner of ours at Freight 360, but we're not the only partnership that DAT has. So when it comes to the asset-based insurance realm, MIG, you guys, Mitch, you guys are the preferred insurance provider for DAT. Is that correct?
Yeah, that's correct. The partnership kicked off a couple months ago. Nice newsletter went out about it. And from there, we've been trying to help as many clients that, come to us from DAT and provide them with as much knowledge as possible and questions that they have and trying to earn their business, for their upcoming renewal, or if they're trying to leave midterm because they're unhappy with their agent or what's going on in the industry right now. They're trying to cut costs anywhere. The rate's not what it was 2 years ago, right? During COVID times, it's been very volatile. So, we're trying to help out in any faucet that we can.
Yeah. Awesome. And we did link, there's a good press release down in the show notes, if you're on YouTube, it's the description box. If you're on a podcast app, just check down in the show notes. You'll see the DAT and MIG press release. With that said, Ben, let's give a shout out to DAT and we'll get into insurance.
Tired of struggling to find accurate rates and the right carriers for your freight? With DAT1, you can access more than 500 million posted loads and trucks every year. That's 3 times more capacity than any other load board. Plus, their integrated freight management system makes it easy to cover loads 24/7. They have the most trusted network of carriers, brokers, and shippers in the industry. And you'll get real-time rates on every lane so you know exactly how much a shipment will cost before you commit to it. Check out the show notes for a free month of DAT1.
Absolutely. All right, so let's talk insurance here. Obviously, on the brokerage side, we've talked what insurance policies a broker needs to have. So at a bare minimum, it is technically an insurance product. There's your $75,000 surety bond, which can be replaced with a broker trust fund of $75,000 as well. So, and then in addition to that, a lot of brokers will carry policies like contingent cargo and liability policies, contingent auto. You'll even have umbrella policies. A lot of that's going to be really driven and dictated by your customer in their contract and during the onboarding process.
I would ask this, and I would put this forward, is like, can you think of any instance where it isn't driven by the shipper? I mean, like every single company I've ever dealt with, like the reason they have the insurance they do as a brokerage is because at some point a customer requested it, and then at some point maybe some customer requested more of it. Have you ever seen an instance where that wasn't the case?
I have. So where I've seen it is where we as the broker have opted to purchase an all risk policy to be in first position for cargo in case the carrier does it. That could be like a high value, or maybe it's an excluded commodity from the carrier's cargo policy. So we would opt ourselves to purchase an all risk single load policy. And by doing that, we don't have to go out there and search for a carrier that either has that included coverage or has to go out and shop for it themselves. And I'm curious here to pick Mitch's brain on how that looks for a carrier if they have to get a spike policy or gap coverage or something like that. But that's really the only time that I've ever personally seen it. But I would say 95% of the time or more, it's just driven by whatever your customer needs or says they need, whether or not it's realistic coverage. Like we all know, contingent cargo very, very rarely actually pays out a claim. But a lot of customers are going to say like, yeah, you've got to have contingent cargo. So, but anyway, where I think the asset-based coverage is really important is when we go to vet carriers out, and I've got a handful of stories we can talk through today as we're talking with Mitch, but there are policies with a carrier that, if you look at that Accord form or, their certificate of insurance, you're going to see dates and you're going to see policy limits, but you don't always see the exclusions that are on there or any of the little nuanced stuff that happens in the underwriting process. So that's where it's really important to understand what these asset-based companies' policies actually cover and what their normal limits are. So that being said, Mitch, I'm curious. So obviously you guys focus on the asset-based side. I think you mentioned earlier this week to us off air that brokerage policies are likely going to be in the future for you guys down the road as a service. And that's awesome. So, but on the asset-based side, what can you tell us about some of just the basic policies that a carrier has to have, and then some of those additional policies or maybe additional coverage that could be oftentimes recommended for them?
Of course. So, I mean, as you guys know, the basic to get your authority active for an MCDOT number, $750,000. Bare minimum, basic, greenlit, cross state lines, you're good to go. Most brokers, like you guys know, they want to see $1 million in auto liability. So, off the bat, being a trucker entering into the space, you really kind of want to know what you tend to go into. And that's going to differentiate where your business is going to be at and how expensive your policy is going to be. Probably the cheapest is going to be your basic general dry freight, Amazon, Walmart pallets, basic goods. Now, as you start doing flatbed, you start doing diesel containers, you start doing livestock, you start doing cars, it's going to get more and more expensive because those are just higher risk type of commodities. So with the bare bones, you always need auto liability. The federal minimum $750,000, but you're going to want a policy with $1 million, $100,000 in cargo coverage, standard across the board. If you need more, you see a broker, a shipper that has really good lanes, you need $250,000, $150,000, even $500,000. We have the ability to get those, but the baseline to start off, $100,000. A lot of people don't know where they're going to go, in a couple months from now. They just are trying to get set up to try and get greenlit, run with some basic shippers and brokers. Along with that, depending if they own the unit or not, They would want to have physical damage. That pretty much protects it. If they either cause an accident, total loss, truck burned up, they want to get paid out so they can go buy a new truck. So that's up to them, really. They don't have to have it. It's not federally regulated. It's just, if it's owned, if it's leased, financed, you're going to want to have that on there. Another thing a lot of people aren't aware about is actually called trailer interchange or non-owned physical damage. Very big things in the world that we live in that's going on right now. Not a lot of carriers know this. The biggest difference between these two things, trailer interchange is a piece of paper given to you by a shipper or broker with a stated contract you're using their trailers exclusively. Non-owned physical damage, you wouldn't need that paper. Anything that would happen to that trailer would be covered. So the biggest difference between these two, not only is that piece of paper, is actually going to be theft coverage. And we've had plenty of instances where people had non-owned trailer coverage. Their trailer got theft out of Chicago, denied the claim because they left the trailer unattended. If the trailer's unattended with trailer interchange, it will be a covered loss as long as you're able to give us a contract.
Are you talking? I'm gonna hop in here. Are you talking about stealing the entire trailer, or breaking into it and stealing cargo out of it?
Stealing the entire trailer. People have stolen a lot of trailers out of lots. They'll drop the trailer out of lot, go take the semi somewhere at a hotel or whatever. They'll come back, trailer's gone.
Wow.
Tags broken, trailer's gone. Yeah, it's been happening more recently. And recently we've been trying to, be conscious of our, carriers and send them emails. Hey, make sure, the difference between these two coverages, if you have trailer interchange, make sure you have a written contract. It could be a simple 1-page written contract, as long as it's a contract that's just between you and a broker.
Yeah, so I want to add to that too, because we've talked about trailer interchange at least a couple of times in the past, and this is really big. So if you're, as a broker, if you're going to hire a power only truck to go in, and maybe, let's say, I'll use drayage for an example. And Ben, you've got a lot of experience in drayage. If you send a power only unit in and they're going to rent a chassis, they don't own that chassis, right? So they don't have coverage on it. That's why that trailer interchange insurance and also the written agreement in place is extremely important, because if there's any damage to it and it's not covered under their policy, they're going to have, it's a big headache. It's a lot of issues right there. So it could be, like that drayage example. It could also be if you've got if you're doing some sort of a trailer program where you're using leased trailers that don't belong to that actual physical carrier, they've got to have coverage for that as well. Correct? So anything that they don't own themselves that would not fall under their policy would be covered under a trailer interchange insurance policy. Okay.
Yep, trailer interchange or non-owned trailer coverage. And a lot of times your shippers and brokers tell you, you need trailer interchange, you need trailer interchange. And they come to us as, just getting into this business, and they can't provide us a contract. So a lot of times we can't get it for them because they don't have a written contract in place for that coverage. So a lot of times non-owned trailer interchange will suffice for it. But you just have to realize the difference. If theft were to happen, if you left it unattended, it's not covered. And a lot of times, insurance companies want to see this contract of trailer interchange before they give you trailer interchange.
So are those two phrases synonymous? The trailer interchange and the non-owned equipment, are those two, that means the same thing?
Yes, essentially. Yeah. They're pretty much the only difference between trailer interchange and non-owned coverage is trailer interchange needs a written contract.
Yep.
That's the biggest difference between the two. And that trailer interchange will cover theft of a trailer.
Okay.
I have a question.
I'll give you another example, and then Ben, you take it away. But here's another example.
Now. Before you go over the example, I have a question about that because I want to understand that. If you have a contract, right, which covers you, I'm guessing that only covers you for those specific trailers. Like if you have non-owned trailers and that one gets stolen, it's excluded, I'm guessing, from that policy?
Correct. Yeah, correct. That contract. So if that contract's in place, with trailer interchange, you're doing it, you're using his trailers, and then you decide to not use his and pick up another one that's non-owned, like just rent one to do this one load to get back there, and it gets stolen. Yeah, that won't be covered because you don't have an agreement for that specific trailer.
So here's another example then that I'll give you is, and Ben, you've probably dealt with this as well. You've got a carrier, maybe it's an owner op hauling a load for you, and they break down. And that trailer has to get moved still because it's a hot load. It's got to get somewhere, whether it's going to go to a cross dock facility or someone else is going to haul it to its final destination. You're going to hire another carrier to then potentially haul that original carrier's equipment, you need to have that interchange coverage and contract in place there, because now that's another example where they're hauling someone else's equipment that they don't own themselves. So I'm trying to think of any other examples where that might come into play. We've covered like chassis, leased, and then like a breakdown where they haul someone else's trailer. Can you think of anything else, Ben? Or even Mitch, any other scenarios where that would come into play?
Yeah. And so one scenario is I have an insured of mine, about 37 trucks. I mean, all they want, they only do non-owned trailer coverage. They don't do physical, they don't do trailer interchange. They don't care for it. They're willing to take the risk of the trailer getting stolen. It's a little bit risky, but the reason that they do it is they don't have a formalized agreement. He borrows all his trailers from his three friends that he's known in the industry, and they're not making an agreement. He just comes to his lot, picks up some empty, flatbed trailers, and goes about his day, uses it, drops it off, gets another one. So in that example, if you don't care for it getting stolen, or you can't furnish a contract, non-owned is completely fine. If that trailer gets totaled out, gets hit, you damage it, it's covered. It's completely covered. It's non-owned trailer coverage for a reason.
The question I want to ask is what about the cargo inside? Where does that fall in that example? Is it just not I'm guessing it's still covered somewhere else, right?
Yes.
Like in that example, right? If the trailer is stolen, you don't cover the trailer, but the cargo is still covered, correct?
Correct. Yeah. There's going to be, most cargo coverages have theft included. Some of them will not have theft included. So, for example, Lloyd's of London and sometimes American Interfidelity Exchange, in certain cities, Chicago, Los Angeles, New Orleans, New York City, if any cargo gets stolen, they deny the claim. That's a high risk city to them. So they're going to flat out deny it. So you don't want to leave certain things unattended, because if you leave it unattended, that's where it comes in. No one's going to try and steal it while you're, hooked up at a TA, charging up or, fueling up.
Another thing I want to make a point on too, and we talk about this every time we mention insurance, is that the purpose of insurance is, well, one, there's a legal requirement for a certain amount. Like you mentioned, $750 for liability and $100K is standard for cargo. But all these other policies, the reason that we purchase them, or a carrier purchases them, is to offset risk, right? And the example you gave of one of your customers that chooses not to have coverage on in certain areas, he's accepting that level of risk personally, right? And that's why you could have everything under the sun covered with an insurance policy, but it's probably not going to be cost effective, because it would cost way too much for you to conduct business profitably. So keep that in mind. We always recommend, whenever someone's looking at insurances, to work with a good insurance broker who can shop multiple policies for you and put together a plan that works specific to you, because not every carrier and not every broker is created equally and has the same level of risk tolerance. So do you know how many different underwriting companies you all work with?
Like literally over 67 different A-rated providers. So, I mean, and to your point exactly, to be able to shop around multiple people, but it also comes down to being an open book of knowledge, right? I've been here quite a while and absorbed everything like a sponge. So I can tell you the difference between multiple insurance companies at the drop of a needle. You have to find an agent that was able to answer your questions. And if they're not able to answer it, they're going to ask the underwriter or get the answer for you, because, an agent can be like, oh, here's the best quote. The insured loves it. They go and take it. Unknowingly, it doesn't have physical damage, no GL, they have live seafood excluded if they're a reefer operation. I mean, you got to be able to tell these clients, your insurers and the carriers, the pros and cons, the details, the nitty gritty stuff that, is in this policy that's going to affect their livelihood if they don't know. And you're correct. Like having the whole under the sun thing, it is expensive, right? So that's where the education comes, be like, hey, you can do this, this, and this. You would want to probably stay away from this, this, and that.
Okay. So you brought up exclusions, and I definitely want to hit on this because I've got a couple stories on it, but what are some of the common cargo exclusions that you run across with some of these underwriting companies, like certain commodities?
Yeah, some of the biggest ones are going to be like high-end electronics. They're going to be jewelry, ammunition, firearms. They're going to be fireworks, live seafood. That's like a target commodity. Hanging meat. Let's see, another one, pharmaceuticals, high-end perfumes. So, I mean, those are just 10 off the rip.
How about alcohol? Is that one too?
What?
Alcohol, like beer and liquor and
Not
stuff?
really. So a lot of carriers will allow beer, wine. Sometimes it's the liquor that's going to be more of a target commodity. They'll exclude it on the front end, but maybe for an extra $200 for the year, you can haul liquor. It's just there's going to be certain commodities you need to let the carrier know, hey, I'm going to be hauling this. Please make sure you quote it for me. I know a lot of these carriers, they want to do everything, right? When they first set up, they want to do it all. I want to be able to have posse, I can do it all. Doesn't work like that because there's going to be certain situations where you can only haul specific things. Everything's a different risk. Dry van's going to be cheapest. Then you got refrigerated goods. Then you got, flatbed. Then you got gas haulers. You got livestock. I mean, the list goes on. So you just got to know what you intend to do. If you want a broad form cargo coverage that does reefer, flatbed, general freight, it's going to cost. Everything has a cost.
Yeah. So like probably the three instances that come to mind right now where we've run into this, and luckily we didn't get dinged on any of them, but we found out after the fact that the coverage was not there, and it could have been a big headache for us. But we had hired a carrier to haul seafood for us, and came to find out a couple months later that all these loads that they were hauling, they had an exclusion on their policy for seafood. And luckily, we worked with the carrier and were able to find other carriers as well to make sure that we were then having coverage for our customer on that commodity. Another one too, I think it was either beer or liquor, where we had to make sure that we got the carrier to add some kind of rider or coverage to make sure that the product was included. Another one too is carriers that don't have reefer breakdown. That could be a big issue as well, because at least the brokerage I work for, we do a lot of temperature controlled product, and we have made it a point to go out and say, if we can't tell from their certificate of insurance if there's an exclusion on something, we need like an email or something from the insurance agent that states, yes, this policy does not exclude X, Y, and Z commodity. Therefore, your customer is covered in this. So, because those certificates, they list, like I said before, you're going to have the policy, the amount of coverage and the dates on it, but you don't really see everything behind the scenes on it. Is that correct?
That's absolutely correct. I mean, you don't want a COI that has 17 different pages. I mean, I know you guys and how time sensitive this is. No one's going to look at that, right? So pretty much if you do a specified target commodity like that, like our COIs will literally say fresh seafood included. So pretty much like you have a broad form reefer coverage, but there's certain commodities, pharmaceuticals, hanging meat, reefer, boom, we'll always list those at your guys' request. I mean, it's super easy. It's not hard. It's not tedious. And then on top of that, also, I always advise all of my clients to read the policy that I gave you. Like, read the binding documents you signed up for. You're going to see everything that we talk about and just kind of have an image, take a snapshot in your mind of the exclusions. I mean, it could be 8 things. It could be 12 things. I mean, you just want to make sure, hey, these are excluded. Make sure you don't do any eggs, for example. They're one of the most highest claims.
That was another one, was eggs. Yeah. We had.
Yeah, he had dairy on there. I actually have a story like that. He had dairy, he had frozen food, fresh seafood, pretty much the whole 9 yards. He couldn't haul eggs. The eggs and ice cream were the only 2 things he couldn't haul. And he got a big egg claim. So, yeah.
Well, that's no fun. So let me ask you this. When it comes to high value freight, right? So I'm a broker, right? And let's say my customer wants something moved and they require, let's say it's $250,000 in cargo coverage. Do you guys, so a company that you guys are insuring, a trucking company, do they have the ability to add a single load coverage on there or adjust just for a certain period of time? What does that look like for them?
So typically you're doing a one load, you have 100,000, you want to do the 250, you're doing high value electronics. You have a few options. One, you can get the quote from us. It will take, a couple hours. I know sometimes you don't have that type of ability unless you're like with Progressive or some type of instant rater where we can do it in 10 minutes and tell you to quote, hey, this will be it. And then you can take it off the next day. But most of these other carriers, if you want 250 cargo, it'll be for the remainder of the year. But I always refer this excess trip cargo.com. You literally just plug in the excess that you need, where you're going from, and then they give you a quote for, $400 for an extra 150K in cargo coverage for a one-time load.
Okay. So they're doing the gap between the standard 100K and then whatever that required amount is.
Yes, sir. Yeah. Yeah. So it's like that. And then a lot of times also I'll ask them, hey, does the broker have, any excess cargo coverage or all risk coverage like you spoke about earlier? You may want to ask them if they have that, and you're good to go. So,
Gotcha.
I always felt like one of the biggest issues with insurance is like perpetuated by like the most unethical salespeople in it, because like you said, 67 carriers, right? There are any number of carriers out there, not trucking, but insurance carriers, right? That are willing to mitigate basically any risk that any company really wants to, right? Like if you want to mitigate it, somebody will provide that product and they will attach a certain dollar amount based on how likely that thing is to happen, right? And it's just most simplest sense. The problem, I think, is that the consumers of it treat all insurance as if it's the same. And then when they talk to an agent, or especially when they have a policy, right? And then someone else goes, well, I can save you money. And they go, well, I save money on your policy. And you're like, yeah, but what's your coverage like? And they're like, well, what do you mean? I'm like, well, are you paying for the same risk that you were paying for before? And they're like, well, it's insurance. Yes, but you could be paying for some completely different thing under each instance. And again, if you don't trust that person that's explaining it to you, again, the layperson reading through binding documents is not likely to pull out all of this information, right? So like it really is one of these things that I feel like, even if it's not trucking, any insurance you purchase, right, in your life should be through somebody you trust to explain the reason you're buying it for, right?
Yeah.
Which I think is one of the most overlooked things in the whole industry.
I'll add to that too. Anyone who has car insurance or a homeowner's insurance policy, or if you're a renter, a renter's insurance policy, one of the ways you can reduce your cost is to increase your deductible. And the same thing applies for trucking companies too. And a company I worked for years ago, our system used to flag us if a carrier had what they considered a high deductible. So can you talk through, Mitch, what a standard deductible is for someone's cargo policy, how high they can go on that deductible, and maybe some of the risks that associated with reducing their cost by jacking that deductible up?
Yeah, and more than happy to. And so with deductibles, there's $1,000. It's pretty much the standard. Everyone goes for that. Then obviously there's $250, there's $5,000, $10,000. Then it can get all the way as high as $50,000, right? For these 100+ fleets, sometimes they have that $50,000 deductible. Reason being, one, to save money. Like you said, once you get obviously that high of a deductible, it does save a lot of money. But like when you go from 1,000 to 2,500 or 1,000 to 5,000, it necessarily doesn't save all that much money. You get into, let's say, 2 claims and you have a $5,000 deductible. I mean, you're paying off the rip $5,000. That's $10,000, and then insurance is covering it. Meanwhile, you could have had $1,000 deductible and saved whatever the difference was. Right? That's $2,000 you would pay instead of the $5,000. That's $8,000 you're saving by having a lower deductible and only being a $400 difference for the year. I mean, I get people have to penny pinch, but you have to also think, where am I going to be? I need to be safe. I need to protect myself, my assets. So,
we had a situation last year where there was a very small dollar amount claim on a load, and I think the carrier's deductible on their policy was $2,500, and the amount of like the value of the loss was less than that. So they weren't going to even file a claim. And I think we got into this issue where now we're trying to get the carrier to pay out of pocket for it, and they kind of went off the grid for us. Have you ever heard of any stories like that?
Yeah, it happens. They will dodge you guys, phone calls, emails, the whole 9 yards, and stop working with brokers so they won't have to pay that little $1,000 claim for a bent box out of a pallet. So you definitely just have to keep staying on them. And sometimes at the end of the day, you actually can go against the insurance and try and get that from them, even though their deductible is that high. Insurance sometimes has a way to get that money back from the carrier because they haven't paid up what they have done. It's just, knowing the carriers and getting in contact and getting them, because a lot of people I've heard have done it. They get banned from working with that shipper or broker until they pay it.
So to be clear, so everyone listening understands, if there is let's say there's a claim for $50,000 on a load and the carrier has a $1,000 deductible, the insurance company is paying $49,000 and then the carrier pays the other $1,000, or do you guys pay the $50,000 and then
50.
recoup the $1,000 from the carrier?
50,000, we recoup the 1,000 from the carrier. Yeah, the insurance pays the whole thing because when it gets broken down from the claim standpoint, they'll always have their payout and then less deductible, and then whatever it is, like for physical damage, say if it was a total loss, $50,000 total loss truck, total payouts could be $50,000 less than deductible. They're only getting $49,000 because that's essentially them paying that $1,000 deductible. So they're retaining that $1,000. So that's how that's going to work. Yes.
Okay. Gotcha. Ben, you got any questions you want to pick his brain on?
I'm curious of like one of the more interesting stories that you've maybe run into in the past few months where just something either unexpected or in whatever way stuck with you that you could share with kind of the audience on common mistakes carriers make in it, or
I'll share
comes
two.
to mind?
I'll share two. Both, unfortunately, reefer operations that didn't do the due diligence. So there's this one company, about 27 trucks. I think they're out of Kentucky. And they're not our client, but we were trying to earn their business. And so we got their loss runs. And they're telling us a story about a $99,999 claim that they had. What had happened is the broker that they worked with, the BOL, said reefer goods. What the reefer good was $1.2 million in pharmaceutical products, not $100,000. $1.2 million. A section, one pallet could have covered the $100,000, but whoever that broker was stuffed it full of these pharmaceuticals. And so what had happened was the BOL set a certain temperature to keep the reefer at, but the docking guy said, no, you have to keep it at this, and wrote it down. And initially wrote it down, hey, no, keep it at this for these products. They didn't know they got packed with pharmaceuticals. And so they go pack. He puts it at what the guy told him. He takes it to the receiver. All of these vials, $1.2 million, frozen, wasted, gone, useless. Can't do it anymore. Put it way too low for them to work anymore.
That's wild.
So, yeah, crazy. And so,
well, where's the liability go to then? Yeah.
Most of the liability is going to the broker. The cargo claim, they paid $100,000. They paid the $100,000 because of taking the dude's, not listening to the BOL, but taking the docking guy's word on what to put the reefer at. So they paid up the $100,000, but that was it. They're like, we're not paying anymore. We'll fight tooth and nail. And so it's all on the broker at that point for messing up. Instead of just sectioning it off, they were just trying to pack it all in one go so they won't have to pay for any more people to transfer the load. So that's one story. And then I had another story.
Wow.
where unfortunately one of my old clients decided to do live seafood without letting me know he was going to do live seafood. Never done it before. Never had an issue with it. He knew he couldn't do it at the time. He had frozen seafood, frozen, not fresh. So like fresh octopus, something coming from Fort Lauderdale ports, coming up here to Georgia. And so didn't let us know. Nope, he didn't. And so he messes up the mechanical temperature of it. He put it 10 degrees too high. He gets to the receiver station and it all falls out of the truck. Soupy mess from being too warm. Yeah. So it was total loss that couldn't pay out because it was excluded commodity.
Details matter. They are important to the tune of a 1.1 million in the one instance. What ended up being the total loss on the second one?
It ended up being like $70,000 in fresh seafood. Yeah, because I mean, he just it was at 30. I forget what he was at. It was at 32. Like that's technically frozen. I was like, no, it doesn't matter what the temperature is on the reefer unit. It matters what exactly you're hauling. Like fresh seafood needs to stay alive, and so he didn't do it in the right way to keep him cool enough to keep their form, and it kind of got everywhere.
I got one last question for you. So we had a series on this show before we talked through produce, and a lot of the, part of that is the claims process with fresh food and produce commodities. Do you have any best practices that you would advise either for a carrier to follow or for a broker to tell their drivers to follow when it comes to, the temperature setting, the reefer setting? I've heard horror stories, kind of like what you just said, where the BOL has one temperature, but someone on the dock said a different temperature. Or we've had drivers say, I was not allowed to be on the dock. I didn't see the quality or I could not see the state of that product when it was loaded on. Do you have any advice or tips, best practices to give out to drivers or carriers, or for us to tell them as brokers when it comes to that kind of stuff?
Absolutely. And that's one of the toughest things too. Like you just said, when they can't see the product and they can't visually be like, hey, that's rotten, take that out. I can't haul this or else I'm getting dinged for it. Right. A lot of times, it comes across where almost the broker does it in a way so they're not going to be liable for that. They're just going to use the carrier's insurance to pay for, it wilting or, fungus is ground. But really, it just boils down to trying to see the product, making sure it's packed properly into your trailer. And then on top of that, listen to the BOL. There is a lot of times the dock hand is not going to write it on paper for you. He's going to be, hey, boss, put this at 5 degrees for, less than what the BOL says for 3 hours. And then you can put it back up to whatever. Just follow the BOL to a T. You want to make sure everything is done. Know exactly what you're hauling. No, ask me. I want to know what I'm hauling.
We had, it's funny that you brought that up, that example of hey, just drop it 5 degrees lower for this long and then raise it up. We've heard stories, and it was in that produce series we did, where these produce shippers intentionally know that their product's too warm because they picked it and loaded it too soon and didn't have time to cool off to a natural temperature. And they're basically trying to sneak the product on there, knowing there's going to be some level of a claim on there. And if the driver can't see it, right, they're going to try to get away with it. So we've heard some horror stories about that. So interesting. You guys got anything else before we hop into our Q&A section here?
I'll give a shout out to our boys over at Lean.
Yeah. Looking to take your freight brokerage or agency to the next level? Look no further than Lean Solutions Group. They are industry leaders in nearshore staffing for logistics companies with offices located in South America, Mexico, and the Philippines. They offer a wide range of exciting positions, including freight broker back office positions, accounting, tech and web development, business development, marketing, customer service, and more. Don't miss out on the opportunity to work with the best in the business. Visit their website at www.leangroup.com to learn more about the exciting solutions that they have to offer your brokerage or agency. All right, so we've got 3 questions here. The last one, Mitch, will include you on. It is insurance specific. But the first one, Ben, one of our listeners asks, should I be prospecting the shipper or the receiver? And the answer is, it depends on, you can prospect both. It all depends on who's actually tendering that freight out. You want to elaborate?
Yep. I mean, that's the question you ask. The word tendering is the person that is responsible for having that truck pick up that load. It can be the receiver, it can be the shipper, it can be neither of them. You really don't know until you ask the question. And that's one of the main reasons why you can't really find the ideal prospect until you've had a conversation with them, which is one of the reasons why you have to make a lot of phone calls in our industry, because there's no easy way to find that out. And it also changes. There could be a point in time where the shipper was tendering the loads, and there could be a point in time where the receiver tendered a portion of them, and they both were. And then there could be a certain instance where a few years later, neither of them do, and another company tenders those loads, right? So you genuinely don't know until you ask the questions, and then you work towards understanding their supply chain better, because that's how you uncover that question, the answer to that question anyway.
Exactly. So if a customer is shipping outbound, that's the shipper you're going to be having as your prospect. If you're a shipper, or if your customer is the receiver, they're the ones actually receiving the good from a customer of theirs or a supplier of theirs, that's who you're going to be prospecting. But again, you don't know that until you start making phone calls and have those conversations. Good stuff. Next question. What are the weight restrictions on a full-size semi-truck? So if you're dealing with a Class 8, like a full 53-footer, your standard fully loaded legal weight, and this includes the cab, so like your tractor, trailer, and cargo on board, that's 80,000 pounds. That's your standard max weight capacity before a permit would be required. If you want to break it down by axle, a single axle would be 20,000 pounds. So think about your front tire, your front axle on a truck. Or if you're in the LTL world, your 28-foot pups only have a single axle. That's a 20,000 pound max. If it's a tandem double axle, it's 34,000 pounds. So you have to meet all the criteria. So fully loaded, to scale legally, 80,000 pounds total, 20,000 pounds on a single axle, and 34,000 pounds on a tandem double axle. And again, permits are big. So some of this oversized, overdimensional freight, like your big construction equipment, or a lot of times military freight, if they're moving big trucks or equipment, you're going to have special permits. And a good carrier that hauls this stuff regularly can go ahead and shop those permits for you and include that in their all-in rate to you as a broker. So we've gotten that question actually a couple of times.
It is, and I think it's important to point out, this is why you really can't know that number for sure unless you know the weight of the carrier you're using's tractor. Because this comes up in drayage a lot. And that was the question we were talking about yesterday, was a container came up. It was like, well, it's 47,000 pounds an overweight container. Well, you need to know also the tar weight or the empty weight of that container, plus that cargo, plus the weight of the chassis, plus the weight of the tractor.
Yep.
And most of the ocean bills of lading for drayage will tell you the empty weight of the container so that you can factor in, do I need a triaxle to run this legally, or can I run this on a normal chassis? Same thing goes for vans and reefers for the most part.
Yeah, and that's why you'll see, like, obviously a flatbed is going to weigh less as a trailer than a reefer or a dry van. And that's why you'll see you can load a flatbed sometimes up to 48,000 pounds of cargo, where you're probably limited more towards like 40 to 42,000 on an enclosed van or reefer unit. So, but good question. All right, our last one here is, I'm getting pushback on my asset-based trucking company from my insurance agent. They're telling me that I'm too new and they won't insure any additional trucks right now. Are there any workarounds on this? So, Mitch, I'm curious on this. What does that look like when, let's say, a carrier's new? I think this guy said specifically he had like 5 units and he was trying to add more on, and the insurance company said, can't do it, you're too new. So what kind of options would someone like that have?
Yeah, absolutely. And so, that just boils down to the communication between you and the agent, right? I know a lot of times you don't know what the future holds for your company. And so, he should have and could have done a better job being, hey, so-and-so, you can only grow up to 5 for this first year in business with this company, right? Hey, sir, you can only grow up to 1 truck for this year. A lot of times agents will not mention that. For example, Lancer, great company, A-rated. For your first year with them, you cannot grow at all, period. You can't add a driver, can't add a truck. Solo, they want to watch you, how you run your business. Canal, you can add 3 units. Trashier, you can add 20 if you wanted to. It just depends on what you want to pay. So he can easily do what's called a midterm move and find a company where he can continue to grow. But, shame on his agent for not informing him, hey, you're at a cap at this X amount because this is your first or second year in business, instead of showing him multiple options and telling him pros and cons of each, right? So, hey, this Lancer is only 12,000 all lines, but you can't grow for your first year with them. Hey, this Trashira is 17,000 all lines. You can add 20 trucks if you want to. How do you want to work your business? It's completely up to them. So that's where communication and trust comes from.
And that's probably, again, it's probably a cost. There's a weighing of options, right? You probably get your insurance for cheaper if they're going to say, hey, you can't grow it all this first year. But if they're going to say, hey, we'll grow you up to 20 units this year, probably going to pay more for a policy like that. So
yeah. And the reason why they do that is all the statistical and analytical data, where if you have rapid growth, your safety scores are going to increase and your losses are going to increase. And so that's why some of these companies have the restrictions to mitigate the losses, to mitigate the safety scores, and they're willing to give you the better pricing because you're going to follow those guidelines, the FMCSA guidelines, you're not going to get the claims. But you want high sporadic growth, 20 owner operators off the bat, you're going to have to pay for it.
Gotcha. Well, cool. So again, there's a link in the show notes or description box to learn more about MIG. And also if you want to read the press release, you guys are going to be at Matt's. Is it next month?
Yes, it's the end of this month, beginning of April. We're going to be at Matt's. We're actually right across from the DAT booth, and we're also next to our sister company, OTR Solutions. So, we make like a little triangle there, so you can just hop around, come visit us, ask us questions, pick our brains. We're here for you guys. We're here for the whole industry. So we're looking forward to being at Matt's again, having our presence, and making as many connections as possible.
Awesome. Well, Mitch, we appreciate it, man. Awesome to have you on the show. Hopefully we can do it again sometime down the road and talk more insurance stuff. So do you have any last words or thoughts for the listeners out there?
No, this podcast is absolutely awesome. I hope I can be on it more. You guys are so knowledgeable in this industry, and I'm shook at some of the stuff that I've learned today, and I've been doing this a while. So I can't thank you guys enough. You guys are awesome.
Our pleasure, man. Glad to have you.
Yep.
Ben, any last thoughts here?
Whether you believe you can or believe you can't, you're right.
And until next time, go Bills. That wraps up this episode of Freight 360. Check out the show notes for links to anything that we've referenced on this episode. And make sure to visit us online at freight360.net to see our entire library of episodes, videos, blogs, and more.
And make sure to check us out on Facebook and subscribe to our YouTube channel for daily and weekly tips and content. And if you'd like your question answered on the show, fill out the Contact Us form on our site, and we'll see you next week.